Stocks close lower on Wall Street. The Dow corrects for the ninth straight day in the longest losing streak since 1978, ahead of tonight's Fed's policy decision. Asian markets open mixed, while the gift Nifty is suggesting a lower start for the Indian markets. Crude prices slip. Brent trades around $73 a barrel on renewed demand concerns. Gold prices too fall on strong dollar and rising treasury yields. Indian government is likely to impose a temporary duty of up to 25% on steel imports in an effort to address concerns raised by domestic producers to control curb on cheap imports from China. Auto retail sales data for the first 17 days of December reflects a near 20% fall in registrations year over year. Two-wheeler sales, which were earlier holding on strong, are down 24% in December so far. One MobiKwik Systems set for a stellar listing after its 572 crore rupees IPO was oversubscribed nearly 120 times. Vishal Megamart is also set for a listing pop after its 8,000 crore rupee offer for sale was subscribed 27 times, and Sai Life Sciences will also list today after its 3,000 crore rupee IPO was subscribed over 10 times. Hello, good morning. You've tuned into CNBC TV 18 and you're watching Power Breakfast with me, Vinny Motiwala. A quick look at what the Asian markets is doing, because the handover from the US markets was a bit subdued coming in, but Asian markets seem to have opened a bit mix, slightly more on the positive side. Now, Taiwan index holding on to gains of 0.1%. We have Hang Seng that's holding on to gains of almost 1% as well. We have Shanghai also that is managing to hold on to gains today. What's not doing well today? Nikkei, that's a bit subdued in trade and down almost 0.04%. So muted trading session with a negative bias coming in from the Japanese market. ASX 200 holding on to mild gains of almost 0.2% in trade. But let's pull up what the Nifty implied open is doing and the gift Nifty is doing. That is down 58 points in trade. Seems like one more subdued day of trading session is what we're watching out for today from the Indian markets, given that the Asian markets are also seeing a bit of a mixed opening. But like I was saying, let's look at what the US market did also did in terms of the Wall Street. That ended lower with Dow Jones tumbling almost over 250 points, recording its 9-day losing streak. Now, this is the longest since 1978. S&P 500 that slipped by 24 points, while the tech-heavy Nasdaq fell 65 points in yesterday's trading session in the U.S. market. Some crucial macro data is coming in from the U.S. Commerce Department. Reported the retail sales in November came in stronger than expected, rising 0.7% on a month-on-month basis and 3.8% on a year-on-year basis. Now, all eyes are going to be on that Fed meeting as investors see 95% chance of a 25 basis point cut. Let's go across to CNBC Steve Leisman, who's joining in with us to give us more updates on the Wall Street and what are we seeing there.
Right now, Joe, the survey says most everyone thinks, and our respondents think, the Fed is going to cut. Not everyone thinks the Fed ought to cut, really, apropos of this discussion we're having. 93% of the respondents to the CNBC Fed survey say the Fed is going to cut rates this week, but only 63% say the Fed should cut. That's our economist, strategists, and fund managers, 27 of them, saying the Fed should cut. Only a quarter point cut, only 2 quarter-point cuts are expected in 2025. That removes a quarter from the last survey. 384 is the 2025 year-end funds rate. 81% say the Fed should, for now, ignore fiscal policy. Here's the rate outlook from the survey. 462 at the end of this year is where we go after the quarter point cut to 437. Down to 384. That removes that 125 basis point cut. And then 348 against a neutral rate, or an average neutral rate of 330. So the idea is that the Fed does remain restrictive over this whole time. Comments by the president-elect and his nominee for Treasury Secretary appear to have calmed concerns about whether Donald Trump will respect the Fed's independence. 56% now say he will respect that independence, up from just 30% in November. A third still believe he won't. 11% remain unsure. Asked about the impact on inflation of all the president-elect's policies likely to be enacted, 11% see them as extremely inflationary. 56% say somewhat inflationary, and 19% say there will be no impact on inflation. 15% expect a deflationary effect. 48% though say they will be somewhat positive for growth. 4% think there'll be no effect, and 48% see them as very or somewhat negative for growth. Economist Robert Fry writing in, I think, expressing the sentiment of a lot of people. I can't remember being this uncertain about the inflation outlook. President-elect Trump is offering us a mix of inflationary, tariffs, individual tax cuts, and disinflationary, deregulation, spending cuts, policies. Who knows what combination we're going to end up with? Overall, respondents see somewhat more inflation this year and next, and unemployment just a bit higher than the current rate, but down from November forecast. The comments that accompany the forecast suggest a wide band of uncertainty right now around that outlook, at least for now, Joe.
Also in conversation with Mark Cabana, head of U.S. rate strategy of BofA Global Research, comments that Fed is no longer in a restrictive stance and wants to normalize monetary policy. Listen in.
The Fed has long believed that they're in a restrictive stance and they want to normalize monetary policy. They worry about keeping monetary policy too tight for too long. And while they've seen progress on inflation slow to some extent, they have also seen that the labor market continues to moderate. And they want to try and do their best to balance things. They likely worry that if they don't cut, they risk upsetting markets. So they're going to go ahead with this cut and then signal that they're likely moving to a bit of a more gradual pace.
Okay, that's all the overnight global market action that you saw coming in. But how are these cues going to be impacting the Indian markets? We have our research team joining in with us this morning to set you up for the trading sessions and tell you what are the important stocks to watch out for in trade. Hormas as well as Sudarshan, thank you so much and good morning to both of you all. Hormas, let me start up with you. What are the important market cues? What are we watching out for in today's trading session? Muted day coming in for the Indian markets again?
The bulls would certainly hope so, if considering the session that we had yesterday. But it's a very important day indeed for the markets because of the fact that a very important Fed decision comes in overnight. We'll be reacting to that tomorrow, and because of which caution continues to prevail across the global markets as well. Yesterday, the US was no different. But for yesterday's session, for the Nifty as well, we closed below the 50-day moving average, breaking down from that 24,500 to 24,800 range on the lower end, closing below the 50 DMA. 49 stocks ended in the red, and unlike Friday's trading session where there was an extremely sharp recovery from the lows, there was no such recovery that came in because every attempt to recover from the lows was very quickly sold into by from the participants, and it was the index heavyweights, right, that dragged the indices lower. Almost everyone from HDFC Bank, ICICI Bank, from even Reliance Industries played a part in pulling the Nifty lower in that 330-point fall. Almost 40% of that came from these top 5 contributors to the downside. Broader markets until this point were outperforming the benchmarks, or at least cushioning some of the portfolios. Even that fell prey to the selling pressure yesterday. 76 on the mid cap index, 73 stocks on the small cap index ended in the red. So no comfort coming in from the broader markets as well. Banks, PSUs, autos, energy, all of these sectoral indices ended lower. So 24,200 to 24,000 now becomes that key support range to watch for the Nifty. For the Nifty Bank, of course, now 53,000 becomes the first important level to scale. And today, of course, it's a big Fed decision. There are 3 listings today. And of course, keep an eye out on insurance and steel stocks as well. But the GIFT Nifty for now is indicating a cautious start for our own markets.
Yes, a cautious start is what we are watching out for the Indian markets. But which are the important stocks that you should be keeping on your radar? Let's start with Ambuja Cement. Now, they've announced an amalgamation of the subsidiaries, that's Sanghi Industries as well as Penna Cement Industries. Keeping an eye out on that one. The exchange ratio is Ambuja Cements will issue 12 equity shares for every 100 equity shares that is held. So keeping an eye out on that. Then we have Aditya Birla Real Estate that is in focus. They've acquired around a 70-acre land parcel in Maharashtra. This is for 104 crore rupees. So something important to watch out for. Jindal Saw, they have acquired 31% equity stake in Renew Green MHH1. So that's something to watch out for in terms of acquisition. RITES have secured an order of around 122 crore rupees. And this is for consultancy as well as construction services by Meerut Development Authority. Viatech Wabag, that's in focus as well. The project, there's a project with Saudi Water Authority for around 2,700 crores, which was there, which has now been cancelled. So maybe some bit of a negative negative move that we could watch out for. Aurobindo Pharma, one of its API facilities that was being inspected by the US FDA, that's the Telangana one, and now this is its subsidiary Apitoria Pharma, which was inspected between December 9 to December 17, 2024. They've received 2 observations for this one. So maybe a neutral move is what we could see coming in, not much of a decline on this front, but surely keeping an eye out on Aurobindo Pharma as well. On that note, those were the stocks to watch out for. But how are the FNOQs shaping up this morning? We have Sudarshan joining in with us. Good morning, Sudarshan.
Good morning, Winnie. So data has turned a bit unfavorable with big selling seen in both cash market and derivative market, and FI selling has led to a sharp fall in index. Both sensex and nifty saw a fall of more than 1%. Even nifty bank has fallen more than 1%. And slightly like, if I can say so, mid-cap index has relatively outperformed, but still it was in the red. And for today also, GIFT Nifty is indicating a start in the red. Currently, it's down more than 50 points. Talking about the flows in the cash market, FIs have sold more than rupees 6,000 crore. It was 6,410 crore, and DIs have bought around 2,700 crore. Even in the futures market, selling by FIs was rupees 1,225 crore, and they have reduced long positions, cut long contracts by 8,651, and added short positions by 7,400. And with this, long exposure by FIs now reduced to 36%, and on the client side, long exposure remains healthy at 62%. On the options front, 2 call options that were active, 24,500, where we have seen addition of almost 75 lakh shares, and for 24,400 call, we have seen addition of almost 62 lakh shares. On the put side, 24,350 put has seen addition of more than 8 lakh shares, and with this important levels for Nifty, support is now seen somewhere around 24,200, the low that we had hit day before yesterday, and resistance is now at 24,600. Stocks that will be in focus, 3 stocks that have entered ban, those are Bandhan Bank, Chambal Fertilizer, and PVR Inox.
Okay, Sudarshan, thank you so much for that. But on that note, we're going to slip into a very short break. We'll get you the latest reports on suggestions that are coming in that the government is considering a 25% safeguard duty on steel to curb cheap imports from China. So stay tuned in for that after the break. Welcome back to Power Breakfast on CNBC TV 18. Let's move on. Reports say that India is likely to impose a safeguard duty or a temporary tax of up to 25% on the steel imports. Now, this is to help curb cheap imports from a top producer, China. The proposal gained board support at the meeting chaired by the Commerce Minister Piyush Goyal yesterday. And in fact, last week, Steel Minister H.D. Kumaraswamy had hinted that the process for safeguard duties was underway. Listen in.
Under process?
Duty is under process, let us see.
But what saying that they will be affected by this. So investigation has been started or not?
Doubts are there.
Yeah.
We will sort it out.
So investigation has been started or not?
Which one?
On this safeguard duty, because you have to first make some process.
Process is going on, let us see.
Okay, let's move on. And we had earlier spoken to the industry leader Sajjan Dindal, the CMD of JSW Group, and Naveen Jindal, CMD of JSPL, and they too pressed on the need for imposing duties to protect the domestic industry. Listen in.
If you open up the records and see China in 1990, what kind of protectionist China were? In 2000, what was their protection levels and what they are today? Today they are opened up because they become the factory of the world. I wanted to export steel in 98, 99 to China. I was not permitted to do that because China had tariffs. They removed the tariffs, but now today we have 0 tariffs on steel. Chinese steel, which is surplus, they are nearly 60% of their capacity is surplus capacity. Yeah. So it comes via Japan, Korea, Vietnam, Malaysia to India at 0% duty.
USA, Canada, they have imposed suo moto 25% duty. Similarly, now Japan also. Japan, can you imagine? Japan is also asking for protection, Japanese steel industry. So the situation is serious. We are very efficient steel producers, so we can challenge them. But then, the steel industry in India, they must have some surpluses also to be able to invest in growth, to be able to decarbonize. decarbonizing is very important for everyone. So we do need resources to be able to do that. So the health competition must be healthy. So we are only against the unhealthy competition that we are facing from some of these countries, and I'm confident that the Government of India is going to take the necessary steps. That would not be enough, because these prices, see, if they were selling at, and we put say 12.5 or 15% duty on the price at which they're selling in the domestic markets, it would be fine. But the market they're losing more than $100 per ton when they are exporting, and which is being subsidized by their governments as per the information that we have. So that's an unhealthy prices. They are not realistic prices. Those are just prices for dumping of their material to protect their domestic industry. But it is hurting our industry, so we have to safeguard against that.
Let's move on. The board of the market regulator SEBI will meet today to discuss the tightening the listing regulations for small businesses. A review of some insider trading regulations is also on the cards. Let's go across to Yash, who's joining in with us with more details on that.
Market regulator SEBI's board meets, and there are three important points which would be on SEBI's table for discussion. The first one would be regulations around small and medium enterprise listing, SME listing. The second one, insider trading regulations. And the third one, with respect to specified digital platforms. The most important out of the three things on the table would be tightening the regulations when it comes to SME listings. There are various suggestions which have come in the form of consultation paper from SEBI that came in November 2024. Some of those important suggestions were increase in the minimum application size to 2 lakhs or 4 lakhs from the current 1 lakh, introduction of draw of lot methodology for the HNI or NII investor category, also breaking up of NII category into small and large NII. Also what it included in terms of suggestions was OFS portion to be restricted to 20 to 25% of the total issue size, as well as requirement of minimum allottees to be raised to 200 from the current 50. There are various other points as far as tightening regulations around SME listing is concerned. That's been a point of concern for market regulator SEBI for quite some time. The second one would be expanding the definition of unpublished price sensitive information under the insider trading regulations. SEBI could consider including many things like change in ratings, proposed fundraising, agreements that impact the management control and company fraud, change in KMP as far as the definition of UPSI or unpublished price sensitive information is concerned. There could be certain regulations with respect to specified digital platforms also that could come up for SEBI's board meeting for consideration tomorrow.
Thank you so much for that, Yash. But on that note, we're going to slip into a very short break. Up next, we get your cues from the world of commodities, so stay tuned for that. Welcome back to Power Breakfast on CNBC TV 18. Now let's move on and go across to Manisha Gupta, who's waiting by to tell us what's happening in the world of commodities this morning. What are we watching out for? Good morning, Manisha.
Morning, Vinny, for that. Well, I'm looking at the crude oil prices, which are trading at a one-week lows. Overnight, we have seen 1% of decline in prices. This is ahead of the U.S. Fed meeting, which is underway now, and we will hear an announcement today in the evening in sense of rate cuts and, of course, outlook for 2025. In the meanwhile, there also are prospects of more U.S. sanctions on Russia oil supplies. That is something that the street will watch out for. The pressure continues because we are looking at weak economic data coming in from China and Germany. And then the trade is worried about fears of supply glut in 2025 as well. The markets will watch out for the U.S. inventory data. The API numbers do show that the U.S. oil inventories have seen a decline. If we see further decline, then that could perhaps support the prices. But a real surge has come in for the U.S. natural gas prices, which have gained 4% overnight. There is forecast of more winters and stronger demand coming in for the next week. There also is a rise in LNG exports, which really seems to be supporting the natural gas prices.
Okay, Manisha, thank you so much for that update coming in the world of commodities. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. But up next, your Bazaar Morning Call.